Hello everybody, welcome back for another video. Hope you're all doing well and that you're all having a fantastic day as always. When you leave a like, when you leave a comment or multiple comments, or when you subscribe, it does help out the channel immensely. And it is very much appreciated. Very big thank you to everyone who's been supporting the second channel as well. Always very much appreciated. And without further ado, let's jump right into it. At the moment, for those of you not looking at the screen, it says Bitcoin and Ethereum keep trending lower. Altcoins increase losses. DCR rallies. Yes, once again, the cryptocurrency market has taken a bit of a tiny tumble. Yeah, not really much more to say to that. I have nothing quirky or snappy to add to that. It says technical analysis, Ethereum slides below $3,000. Why bears could aim for $2,500 over the weekend, and even I believe on Friday. There was a bit of price technical analysis, analytical news floating around that a lot of analysts believe that once again, cryptocurrency prices may have to test lows once again, i.e., they believe that the market has to fall. We have to see if we hit resistance, if we keep bouncing off of a certain level, and then we can move back up. However, I ask, why for the 7th time in the last 5 months does the market have to continuously keep retesting where it just was a couple of days before? You might remember when we saw Bitcoin, what was it, 30 something or other $1,000. It was $38,000, and then we had to hit 39,000 logically, 40,000 logically, and then 41,000, and then we hit 42,000. Everyone was like, that's it. Here comes the moon. And then I saw the trickle of articles begin to roll back in saying, well, we have to retest 40,000. Why we have to keep retesting numbers that we just went by, that we know that we have gone by many other times before, because this is not like it's the first time that Bitcoin has been hovering around or has passed by $40,000. But alas, this one says Ethereum drops below $3,000. Will Ether's price hit $2,500 in the next 48 hours, or a rebound expected? Amazing. Yeah, kind of the same idea. A lot of people are touting this news as, well, it looks like as Bitcoin's price was rejected from moving up to $46,000, maybe we just simply have to test 38,000 again for Bitcoin and 2,500 for Ethereum. These seem to be the unmagical numbers that if we end up hitting them and we bounce off of them, then we'll probably hit a $47,000 Bitcoin, and everyone's like, well, we got to retest 43,000 over and over once again, which is also a little ridiculous, especially when you actually see the news that we have today. Keeping in mind, once again, every single day, regardless of what the price movements have been doing, we ourselves have been getting really good bullish accumulation, buying up everything kind of news, but the prices just will not reflect in our market. And this one says Bitcoin loses $40,000 as retracement towards 37,500 seems quite high. You know what I always say? Just do it. I'm tired of talking about it. I'm tired of there being a long-winded discussion about where Bitcoin's going, how low Bitcoin's going to go, how high is Bitcoin. Just simply, just do it. If you are a whale and you are listening, the market has become quite fatigued with these very slow movements, and we know that the market is capable of so much more, especially as the rich people are buying up all the Bitcoin. The supply is barely there. If you are planning on slow dripping us to the point where after 2.5 weeks we finally get to $37,000 and then we shoot back up, just do it today. I'm pretty sure it's Easter Monday. Give us all a treat. Fall down, rise back up, and let's keep the entire thing moving. And I also looked for whatchamajaggers. Oh gosh, I was looking for stock market news, and there surprise, wasn't any because it was a holiday weekend. But the other stock markets that have begun to open slowly around the world, usually in the Asian market, they're also, not that they're not looking too hot, but, you know, things haven't really changed in the world in the last 2.5 days. So these markets are still reacting negatively to the nonsense that a couple of people on the planet are doing. Anyway, that's the price news. Yeah, it basically only just revolved around Bitcoin and Ethereum falling back down, some type of retracement. Do they have to retest the lows where they were before? Just do it today, like right now. Like, even if you get, like, in this very moment, if you can just drop the prices, let everyone have a little scare, and then just kind of move on back up, because, you know, you can only go sideways for so long. Alrighty. That's all the price news. And yeah, let's move on. Also, this was the most popular news story of the day. This and the next story, and sure, why not? The Terra Luna blockchain's algorithmic stablecoin, known as Terra USD or UST, has flipped Binance's US dollar to become the third largest stablecoin on the market. UST is a USD pegged stablecoin that was launched in September of 2020. Its minting mechanism requires a user to burn a reserve asset, such as Luna, to mint an equivalent amount of UST. According to CoinGecko, UST's market capitalization has surged 15% over the past 30 days to sit roughly at $17.5 billion at the time of writing. The figure currently places UST as the third largest stablecoin after it flipped Binance's dollar, with a slightly lower market cap of $17.46 billion. The asset now trailing only behind Tether and USD Coin. However, the gap is quite substantial because Tether is Tether. The data also shows that UST has been in a meteoric pump since mid-November, with the market cap increasing 525% since then. That's the news. Nothing extra, nothing amazing. There wasn't even mention anywhere else about, like, the Bitcoin acquisitions. The news of the day is that Terra's stablecoin flipped Binance's. I was scouring the interwebs trying to figure out maybe something else was going on. Maybe there was like another huge acquisition of Bitcoin. Maybe they had merged with something else. Maybe there was like a new partnership. Maybe a bank was like, hey, we don't like Binance coin, so let's use Terra's UST coin. And I was like, oh, okay, that would make a lot more sense for the news. Nope, friends. The most popular news story of the day is that Terra Luna's UST coin is now the third largest stable coin on the planet. So, not even joking. That was the Terra coin, stable coin news, All right. Let's move on. In the second most popular news story of the day, the demand for the spot Bitcoin ETF has been on the rise, and some of the biggest industry veterans are pushing for it. The market is hopeful, kind of, that the spot Bitcoin ETF should arrive itself in 2022 as the US SEC gets comfortable with approving Bitcoin futures ETFs. They're not, and they're not going to. We've gone over this for years. There were even moments when they fooled me in 2017 and 2018 where I literally held my breath for 5 months and I was like, well, it's going to happen. The fact that there are at least 15 Bitcoin Ethereum ETFs around the world and markets haven't crumbled, meaning these ETFs are fine, and probably meaning that the SEC is corrupt, just tells me that it's going to take a very long time for these to actually get approved. Earlier this month, the SEC approved the Ethereum Bitcoin futures ETF Interestingly, this ETF was filed under the Securities Act of 1933. However, other Bitcoin futures ETFs approved over the last year have been approved under the Investment Company Act of 1940. Why, I ask, is the world still running in the 1930s? Imagine, if you will, for a second, the year 1933. You have your horse and buggy. You're hoping that you don't get a scratch because there's no disinfectant anywhere and you don't want to, you know, what happened when you got a scratch back then. You are just hoping for the best in your life. There's no computer. There's no cell phone. Nonetheless, a smartphone. There's no computers. There's no internet. There are barely even roads in some places where you are. You see apple groves and, you know, orange groves, and they smell really pretty in the morning, but not really much is going for you in your life because it's 1933. Why weren't these laws revised? And I'll even give them, like, why isn't there like a Securities Act of 2000 that these were both merged under? When we figured out Y2K wasn't a thing, why weren't they like, hey, let's make a brand new one. Let's kind of spruce it up a little bit. I wonder why it's difficult for a new technology that's been around for 13 years, that isn't tangible, that only exists on the internet, has a really difficult time getting through an act from 1933. Michael Sonnenschein, who is the CEO of Grayscale, said, from the SEC standpoint, there were several protections that the 1940s Act products have that the 1933 products don't have, like technology. But never ever did those protections address the SEC's concerns over the underlying Bitcoin market and the potential for fraud or manipulation, like they've been doing for the cryptocurrency market. Do you remember, this was, 3-4 years ago? If we got bad SEC news, the market would drop. And they knew this as well. Whenever we got anyone placing a something for approval with the US SEC for a something crypto-based Bitcoin ETF, the market would rise in anticipation because, of course, they're going to allow this through. All the protections are there. The companies who are putting this forth to the US SEC, they have lawyers. It's not simply one woman sitting at a desk going, I got this. No, it's probably about 15 people sitting at a desk making sure that they comb through everything that the SEC requires. And then they put this forth. And I don't know what the listing fee is, but you'd better bet your gosh darn rear end that there is definitely some type of a really weird, large listing fee that the SEC benefits from. Yeah. So without rambling on too much, it says, so the fact that they've now evolved their thinking and approval of a 1933 act, my gosh. You know the worst part? Our great-grandkids are going to live in the year 2147. Sounds like a correct year. How much do you want to bet the SEC is still going to have the 1933 act? Because if the world changing as rapidly as it currently is right now, think of how crazy things have been in the last 10 to 15 years. Think of how thin your television is, how much your phone in your hand does. And they still have not updated any of these laws for the actual present. And I was going to say future because we're in the future. We have drones and stuff flying around. Anyway, so the news is, for those of you who missed it a couple of weeks ago, the heads of Grayscale, as far as I remember, went on television and sat in front of a camera on CNBC and basically said, if the US SEC does not approve the next Bitcoin ETF for them, because I'm pretty sure they check all the boxes, that they plan on pursuing legal action. So we'll see how that goes. I assume the amount to even think of trying to take on a regulator, this means that Grayscale has some really good paperwork behind them and they can show a lot of things. For those of you, don't forget the news that we allegedly got a couple of days ago that apparently there are now anti-corruption offices who are on the backs of the US SEC, because allegedly some of the, we've heard, SEC officials may have had their hands deep in the Ethereum cookie jar, and this is why they've been trying to knock out a bunch of other coins to protect their investments in Ethereum, allegedly. So saith the news. So once again, just to throw some logic at you, we have multiple Bitcoin ETFs, physical ones, in Canada. A whole bundle. They exist all around the world. What is the SEC taking so long for? Why the constant rejection of something that they know should not be rejected? And even more so for those of you who forgot about this one as well. The US SEC's excuse in 2018 and 2019 was that there were no proper custodial methods for a Bitcoin ETF, i.e., they wanted to make sure that there was a company doing it. That would be Grayscale. There had to be a clearinghouse. That would be, another company. And then there would have to be an actual custodian who was not Grayscale, so that there's no inherent risk of one centralized, see that, location having everything and then losing everything. Remember the huge push that we saw in 2008 where we weren't even a factor anymore, where Coinbase and Gemini announced, wholeheartedly, fudge every single poor person, and we are going to make sure that the cryptocurrency market is just for the very wealthy. You must remember this. I remember sitting there reading these articles like, okay, they launched so many products and so many custodial, institutional-based products that were just for the rich. And then when they realized that rich people weren't really into it as much as they thought, they started opening up the doors to us. You must remember all of this. The point being, everyone knew for a while what the SEC required of everything else in order for a spot Bitcoin ETF to be approved. And we have them. This is why the news of Fidelity jumping into the cryptocurrency space was so significant, because they said, we will be the custodian. You want something that is hyper-regulated, that you've known for a very long time, that isn't something new called Coinbase or Gemini twins on the market? We are Fidelity. We've been around for a very long time. We have trillions of assets under our wings. We will be the custodian. And the SEC was like, that's great. Bitcoin ETF, nope, sorry, not going to happen. So all these protections are already there. What is their actual excuse? Anyway, that's the part of it, at least, of the Grayscale, SEC. He says the SEC risks violating the Administration Procedure Act by rejecting spot Bitcoin ETFs. So said by Grayscale, because Grayscale's current fund, the Bitcoin fund, whatever it's called, it's basically an ETF. It is an accumulation of an asset for other people who wish to invest in said asset, but not directly, but indirectly and indirectly. I.e., Grayscale holds it. We issue you a stock or whatever, saying that you have some of it, and that's kind of the thing. So they basically already have an ETF, it just doesn't have the name ETF, and if they don't get that ETF, well, long time coming. That's the first part of the SEC news, and yeah, let's move on. Also in the news, this is why it's really, connecting together. Fidelity Investments, one of the largest financial services firms with more than $11 trillion under administration, that's a huge number, is launching exchange-traded funds. Wait for it. But they're going to be focusing on the crypto ecosystem and the metaverse. Womp womp. They said we continue to see demand, particularly from young investors, for access to the rapidly growing industries. Fidelity Investments announced the launch of a couple of exchange-traded funds this week to offer investors exposure to the crypto industry and to the metaverse. The first is called Fidelity Crypto Industry and Digital Payments ETF FDIG. That is a long name. It invests in companies that support the broader digital asset ecosystem, including those involved in crypto mining and trading, blockchain technology, and digital payment processing, the firm described. However, this ETF will will not offer direct exposure to cryptocurrency. Surprise! The second is called the Fidelity Metaverse ETF, or FMET. Weird. It invests in companies that develop, manufacture, distribute, or I just smacked my mouth into the microphone, or sell products or services related to establishing and enabling the metaverse. They include firms focusing on computing hardware and components, digital infrastructure, design and engineering software, gaming technology and software, web development, and content services. They made sure that they got every single thing that they possibly could for this ETF. Backing it up a tiny bit. The idea typically is, in the cryptocurrency space, the mantra being, if you are into crypto, you accumulate the crypto yourselves, i.e., I'm into Ethereum. I will accumulate Ethereum myself. I'm into the metaverse. I will accumulate the metaverse coins in the metaverse land because that seems to be the most logical. You go direct. The older custodial financial services have a thing where they keep creating products that give you exposure to something without actually having you hold said thing yourself. The old system is set up so that not only can they remain in power, that is a given, but also so that you never actually hold said thing that you want to hold, especially when you're holding all of these things in US dollars. If a metaverse is going to succeed, it seems most logical to me that you would want to hold the actual land that they're providing and also the token. Because if the fund goes up because the metaverse thing is going up, why not just hold the actual metaverse? Same exact thing for the companies dealing in said cryptocurrencies. I don't want stock or a piece of paper saying that I have a fraction of the Cardano Foundation. I'd rather just own Cardano. However, they're doing this because they don't really have a choice. The US SEC, here we go, refuses to actually approve any physical thing for the space. So a lot of companies over the last couple of months have been launching new ETFs. They usually tout them as a crypto ETF. So you look at them and go, well, this is crypto. And you realize that they're not actually holding any cryptocurrencies themselves. I'm also getting a little tired of reading articles with people talking about that this year. I saw one and I cringed so hard. This year talking about that every government is going to be releasing a cryptocurrency. They're not cryptocurrencies. And we're going to get into that in the next two stories as well, so you kind of really get what's going on. So many people in the space. I implore you on a daily basis, if you have an extra 5 minutes, because we all do, just do research. I don't care. I don't even care what it's on. Just do it on something. Just learn a bit more every single day. A cryptocurrency is something that is cryptographically secured. It is secured by a network, by multiple nodes. It is decentralized. No one has singular control over it. People may own a huge portion of it because they are whales. However, not one single person has control over the entirety of the network, like Bitcoin or Ethereum or even Cardano or many other coins. A central bank digital currency, however, is centralized. It is mutable, meaning that someone can hit a button and mute it. These are not cryptocurrencies. They will never be cryptocurrencies, and they will never, ever, ever stand up to cryptocurrencies. Why? Because they are a digital version of the paper money that we have right now that is going to continue to inflate just simply on a screen as opposed to in a printing press. I don't know why the confusion continues to be there, or even why, here's another one, why within the cryptocurrency space, so much of the news that I'm seeing over the last year is touting central bank digital currencies as almost like a good thing. This country's doing that. There have been, an enormous amount of articles floating around talking about the uptick in demand of this country's central bank digital currency, or uptick in demand of this country's coin, or the adoption rate. And it's like, because in those countries, they don't have a choice. You have to use them. Anyway, so I know the Fidelity also probably feels a little certain way because they've also, I believe, have put forth proposals for a Bitcoin ETF before. And I said it then and I'll say it now. I said, if Fidelity doesn't get it, no one else has a chance. Fidelity is almost as large as BlackRock. If they don't get a Bitcoin ETF, if the people who own more than 99% of countries on the planet don't get a Bitcoin ETF, which makes me, I really wonder what behind the scenes is going to have the SEC finally put one of these forward. I assume it's one of two things. Hear me out. The first thing is what do you call this thing? It's brown. It's like box shape. You open it up, you put clothes inside. A briefcase. And it's filled with something. They're green. They're paper. I guess we can call them money. I think that's the only thing. And I'm not joking either, because there's clearly something wrong with his entire procedure. That when the largest people, the richest people on the planet can't get their way, you know something's wrong. Or here's another really good one. Here's the number 2 of the only reason why a Bitcoin ETF would actually get pushed through. We saw this before in 2016 and 17, before we had the idea of an ICO, an STO, or an ETF, or ETN, ETP entering the cryptocurrency space. There was a lot of demand for Bitcoin. If you remember, I think it was September or October in 2017, I believe Bitcoin's price was only around $4,000. And I mean, literally only $4,000. A lot of big players were looking to get into the cryptocurrency space, but they couldn't really figure out how. There was no, still weren't any ETFs, weren't any funds they could kind of put their money into. So the news that we got was that institutions and hedge funds, banks, had begun to push their money into the actual cryptocurrency market, buying up as much of these things as they possibly could. And this was a part of the reason why there was such a rising force in us flying to $20,000. The idea had been earlier in the year that we would eventually at some point get a Bitcoin futures contract, and that would kind of help to legitimize the cryptocurrency space. It was nothing really along the lines of, well, this is going to get us to a $90,000 Bitcoin. It was more of we knew that institutions wanted in, and the cryptocurrency space wanted a bit of legitimacy, not in the form of us bowing down to the traditional financial markets, but more of just validity in some sort of way. Bitcoin had been around for a long time, and therefore you kind of get the idea. You might remember at the end of 2019 or the beginning of 2020, somewhere around there, we had news from the former head of the CFTC. You can find this. Type in former CFTC Bitcoin futures, or former CFTC head Bitcoin Trump administration. The news that we got was that Bitcoin's price got so hot because so much money was flowing into it. That's the only reason why we got a Bitcoin futures approved, because Bitcoin futures allowed people to be able to bet against the price of Bitcoin. In 2017, there was nothing on the market that allowed people to bet against Bitcoin. And they were fearful that if too much money got into Bitcoin, the capital outflows from their systems would become so great that Bitcoin would basically become gigantic over the course of the next couple of months. So the only way to stop this was by making sure that a Bitcoin, because remember, I think it took like 2 weeks for us to get an actual Bitcoin futures. Like, there was no discussion of a 7-year stint with the US SEC trying to get a Bitcoin ETF approved. It took weeks for this to happen. And as Bitcoin skyrocketed, the Bitcoin futures activated, and people that same exact day were able to bet against the price of Bitcoin. And that, my friend, is what brought the price of Bitcoin down. Dragging it back to where we currently are, the reason why I said all of that is I assume if the demand continues to be quite large for institutions to get into the space, and at some point they simply go, well, listen, there's not going to be a Bitcoin ETF. We have to start buying physically or over the counter, or buy whatever you can from any other places. Bitcoin's price will rise. The SEC will take notice and go, something that we could have jurisdiction over is losing power. If we have a Bitcoin ETF, everyone will simply run to our thing and we would have grasp over this market. But if money continues to enter this market through other means that the SEC does not have control over, that is when they're going to launch it or allow a Bitcoin ETF to go through. But even more so, we've seen the effects of this happening before. When we saw the New York Stock Exchange try to get into the market and backed and remember all those other major stock exchanges trying desperately to get into the cryptocurrency space, but they announced it, I think, in 2018, and it took a year and a half, maybe 2 years to get all the paperwork done. But at that point, kind of the hype was kind of gone. No one really cared about these companies getting into the space because people realized that they could put their money directly into the cryptocurrencies or not have to worry about the New York Stock Exchange creating their own cryptocurrency exchange because there were multiple others. Binance had already become the largest cryptocurrency exchange in the world. So when those products finally did launch, no one really cared. So what happens if the US SEC keeps trailing along and eventually institutions even stop caring about a Bitcoin ETF? Because remember what happened a couple of months ago? I'm pretty sure it was Fidelity. I'm certain it was Fidelity. I think they tried to put in for a Bitcoin ETF. It didn't go through. And then Canada got their first one. And then the very next day, what was the news? Fidelity bought hundreds of millions of dollars worth of their ETF the very next day in Canada. Like US Fidelity bought some from Canada. So I'm sure a bunch of other institutions are doing the exact same thing. Are they trying to make sure that the US doesn't make it? Is it like some type of weird desperation to try and see how long people will have interest in, I don't know. Something's happening with the US SEC. I mean, of course, allegedly, I don't know. I'm not in the room with them or hearing their conversations, but it's more of a, you all know something's wrong, right? Something's not clicking. All right. That's the Fidelity is launching a crypto ETFs, but they're probably going to see limited demand, especially as if the physical assets go up in price and people see that, oh, cool, I made 7% of my ETF while that coin went up 129%. You know. Alrighty. That's Fidelity. Let's move on. Very popular in the weekend news. Bitcoin whales are gobbling up as much as they can since Bitcoin fell below the $40,000 mark. The recent outflows of the asset from Coinbase are being construed, as a pointer for institutional investors. Leading U.S. crypto exchange Coinbase recorded major outflows of Bitcoin from the platform. According to CryptoQuant, Coinbase saw 30,000 Bitcoin leave the exchange for cold wallets and custody wallets on Friday. CryptoQuant's CEO, Kyung Ju, took to Twitter to call the trend. He said 30K Bitcoin flowed out from Coinbase today. Institutional buys might be the big narrative again because the executive order did not create any hurdles. He added that while institutional buyers may have moved assets to cold wallets, this figure is not significant. He states that the latest move was the movement of assets towards Coinbase custody wallets from over-the-counter deals from institutions because institutions are only buying over the counter. It is the easiest way for them to not move Bitcoin's price while filling up their bags. It says 1.2 billion, that is billion with a B, dollars in Bitcoin moved out of Coinbase in a daily outflow. And it says who is accumulating Bitcoin? Who do you think has it's a rich person. It's $1.2 billion worth of Bitcoin in a day. So, this was not major. It was quite relatively popular news over the course of the weekend, but still was not the biggest news of the day, if you will. Yeah. The accumulation continues. Some people are starting to pay attention. Thank goodness. Even people who are on the NFT platform that we talk about sometimes, or I talk about a lot on Twitter. I'm glad that people are starting to oh my gosh, there's not a lot left. Holy guacamole. Did you see what is happening? All the Bitcoin and all the NFTs are being bought up. Anyway, yeah, so whales are definitely accumulating. I wish I could tell you why the prices are actually going down on this news. Because even think about it this way. That was just Coinbase. Coinbase isn't the largest crypto exchange on the planet. So I assume other crypto exchanges also had huge amounts of Bitcoin leaving that same exact day. But alas, here we are. Alrighty. That is the massive $1.2 billion in a single day of outflows of Bitcoin news. Alrighty. Let's move on. And to finish things off, a group of Monero enthusiasts, apparently fed up with centralized exchanges, has said on social media that they are planning an XMR bank run today. The so-called Monero run, I assume that's Monero and run, on the 8th anniversary of the coin's launch is a reaction to what community members see as a lack of transparency over Monero, including allegations that central exchanges are suspending Monero withdrawals and misrepresenting reserves. I am going to assume this is not a joke in any sort of way. I think that these people have been in the cryptocurrency space for a very long time. Discussions like this have not been a topic since around 2017, 2018. We had a very big thing a while ago where people were kind of assuming or figuring out that cryptocurrency exchanges might not have had all the crypto that they were telling people that they had. This is why the idea of Robinhood not allowing people to withdraw their crypto was a gigantic thing in the cryptocurrency market. It wasn't so much all of that people weren't able to cash out of their crypto as opposed to being able to cash out in US dollars or whatever other currencies they were cashing out in. It was the idea that it looks like your platform has a lot of Dogecoin. Where is it? Do you actually have this Dogecoin? A long time ago, people actually cared, weird, right? About the idea of decentralization. The cryptocurrency space is meant to give you some type of empowerment by having control over your own money. You cannot explicitly do this if you have your money on a centralized cryptocurrency exchange where there's just simply a company in one place, and the idea being, if you have control over your own money, well, there's no real problem in you having to figure out when and where or what you can do with your funds. They said looking more and more like exchanges are paper trading Monero and lying about how much they have to customers. Paper trading. This was a very big thing. This is why I said I'm pretty sure the people who are bringing up these topics have been in the game for a very long time. New people in the market don't care anything. Don't lie to yourself. They care nothing about decentralization. They don't even care if rich people who are currently in power. The entire point of cryptocurrencies is to spread out power to everyone. Weird, right? It's supposed to give everyone a fighting chance, if you will, to be able to be in the new financial system that the cryptocurrency market is kind of building. A lot of people in them who have entered the market in the last 2 years care nothing about if the idea of one person trying to buy an entire company and having a 100% stake, if that doesn't terrify you, it's because you don't really understand what decentralization or freedom actually is. Rich people should not own and control everything. Did any of you have a chance to watch documentaries on BlackRock? The videos are literally called BlackRock, the company that owns the world. It's because they own everything. This should not be. There will never, ever be complete equality. You, I, us will never own equal parts of real estate, equal parts of gold, equal parts of the land. Not going to happen. However, it seems a little weird when one company owns more than 99% of the other countries on the planet. This should not be. This is why we have cryptocurrencies, or why they were created, and the original mantra was, we can all be in this system, and we can all have a piece of the pie. We may not have a gigantic piece of the pie, but at least we're in it. They said, opt out, get those keys off exchanges, and actually own your Monero. Information security engineer and Monero enthusiast Seth Simmons wrote on Twitter. Here's the thing for it right here. We've had other crypto runs before in the past. I don't think they were as successful as far as people actually testing reserves. The idea is, in this instance, would be to take off all of your crypto, usually in this case Monero, from all exchanges to see if they actually have it, because basically what you're looking at are just numbers on a screen for a cryptocurrency exchange. You see that you have numbers on a screen, and this is meant to represent how much you have on that exchange, but does the exchange actually hold that many coins? The idea being, we've seen, this is exactly why, if you've ever seen that, here we go. How we know that Coinbase had an outflow of $1.2 billion worth of Bitcoin, because these crypto exchanges have decided to become transparent and show their addresses for these coins. So we know what coins go into them and what goes out of it and how much they have at any given time. This isn't why we had the news. I'm pretty sure it's Robinhood that owns 30% of all the Dogecoin in the world. Like 1 out of every 3 coins is owned by Robinhood. I'm pretty sure that those were the numbers that we got a couple of months ago. So, I mean, I wish them the best of luck. It's very, very sad to see that a lot of the old mantras and the old freedoms of the cryptocurrency space are completely gone. They're completely wiped away. This is why I always find it very weird when people, like, the idea of a rug pull is like very common, like, speech in the cryptocurrency space. This person created a coin. The coin had a $28 million market cap. It was gone. The website's down. They were rug pulled. And everyone's like, okay, well, on to the next project. There's so many coins that have 51% attacks and so many vulnerabilities. They've had 3 51% attacks. That means that the network is not secure. Your money is not secure. And people are like, well, that's fine. I'll keep making money from it. No one... Please do your own. I mean, just read about decentralization. Read about the coins. Like, read about the idea of what it means to have constant 51% attacks. How bad they are. Imagine you had your money in a bank, and every 4.5 weeks, your bank is hacked, and your money goes away, and you go, well, it's fine. They're still my bank. That's kind of the idea of it. It's so weird that people have completely just become fascinated with the idea of making quick, fast money. But I think that was always thrown into the mantra of crypto when we started having these moon boys and these like Lambo boys enter into the market. Like, this is something that can actually and is going to change and is already changing the world for the better in some sort of way when it comes to the actual democratization of money and who can create money. It's not just kings who get tons of gold coins and have their faces chiseled onto it. It's not just one centralized entity that says these are the monetary policies that the world will have to follow since the year 1933. It's an algorithm. We know how it works. We know when new coins are coming out, and we know that the algorithm can't lie to us because it's an algorithm. We can all look into the algorithm. We can run a node from the algorithm to create new coins. So, I wish them the best of luck. It's not that I don't think that this will be successful. It's more of I think so much of the market doesn't care about things like this anymore that maybe 5% of the coins will leave the actual exchanges. But besides that, still going on this conversation of decentralized exchanges and owning your own coins. But I think as prices rise even higher, I think that narrative will be further pushed away because, one, the banks and institutions and regulators don't want you holding your own coins. They want to know exactly how much you have and when it's going to be moving. And B, not many people are going to be willing to hold their own coins if you have 1.2 million in the market. A lot of people are going to be quite afraid because we've been taught and trained our entire lives to use institutions to hold our monies for us. Like, think of that. You've been taught your entire life to give your money to someone else to hold it for you. And what happens if they fail? It's all in the fine print. You got to shrug and go, well, it was in the fine print. I lost my money. Isn't it weird? We've been taught always to give our money and control over to someone else. That's the Monero news. And yeah, let's move on. As always, a very special thank you to my Patreon supporters, GBU Wally, Bubble Mode, How's Life Austin, Auspicious Agile and Blockchain, Jamie Saad, Blockchain Simplified, and let's move on. Empire Queen, Fud Weiser, Roman Geba, Bitcoin Ben, Arachno Dave, Tony Ambroski, The Dealer's Den, Captain Something in the Z-Way Lay, Mo Barazi, VB Nerd 21, Miguel Grolet, Lauren De Silva, Quoted Biddy, Troy Allgood, Space Case, Need a Miracle, Pater Noster, Navarro Williams, Utopia 569, Moonman High, XRP, Martin Stoyo, Nostromo, John Sarson, The Animal Reader, A Bibliophobia, Todd, Mullis, Adam, Graysick, Wise Night Owl, 242 to the World, Bankroll Network, Crypto Artist, Cold D3D, Setsuna, Richie Rich III, Paxis, Nick Mangialavori, Jim Gardner, Jeremy Fox, Minting Coins, Yes to Crypto, Bodie McBoatface, Anytime Fitness, Monk's Corner Staff, Bake Me a Cake, Tigara, Macho Nisa, On Crypto with Lionel, and Creole in Michelle. And Michelle, there we go. And Michelle, URL. Thank you all very, very much for your continued support. Thank you for all the support on the second channel. Thank you for all the art support. Thank you very much for all the nice people out there. Thank you very much for all the likes, for all the comments, for all the subscriptions. And thank you very much for still being here, listening to me ramble on about this market. At the moment, Bitcoin is at $39,000. It is down by 3.3%. It's basically around the same exact level where we were before. We've been here literally 7 days ago. No gigantic surprise. Ethereum is down by 3.9%. Nothing too hyper dramatic. We've seen these prices before. We've recovered from these prices before. It's just a matter of how low will we be going this time. I assume demand is far too strong in the market for Bitcoin to fall back down to $3,000. I would empty my bank account as quickly as I possibly could to buy as many of them. A lot of the analysts are assuming we're going to fall back down to anywhere from 35 to 37, 38,000 something or other dollars and try to move back on up. Very weird market. It's still reminding me very much so of 2017. I'm still getting all these really weird. At the beginning of 2017, the market had moved up and then it quickly began to slide back down, and everyone was like, okay, Ethereum was at, I think, $13, $14, and people were like, that's as high as it's going to go. And yeah, we saw what happened during the rest of the year. So yeah, I do hope that you've all enjoyed. I do hope that you all are having a wonderful day, a wonderful afternoon, a wonderful evening, wherever you are, wherever you might be on this weird, weird planet. I do hope that you are doing just great. Thank you all once again for watching, listening, and or supporting, and I will most certainly be talking to you all soon. See you.